What's up, security token market family? We are super excited to kick off our partnership with Arca, a leading blockchain-focused asset management firm, with our inaugural episode of our six-part video series titled Tokenization for Institutions, What You Need to Know. I'm joined here today with none other than Peter Gaffney, Head of Research at Security Token Advisors, as well as JD, the President of Arca. Welcome, Mr. President. Why don't we introduce ourselves and we'll get right into it. I'll start. So I'm Jonah Schulman. I'm head of communications at Security Token Market. We are a leading provider when it comes to security token data and research. We track over 200 plus tokenized assets, totaling over $18 billion in market cap. If you want to learn more, head to stomarket.com. Peter?
Awesome. And I'm Peter Gaffney, head of research at Security Token Advisors, the consulting arm of the operation. And we consult, advise clients, help them tokenize their own assets or issue security tokens. Thinking about things in the real estate realm, portfolios, funds, individual assets, private equity, venture capital, investment interest, pre-IPO shares. And obviously we're seeing more ideas come through the door day after day. Very exciting stuff. And a lot of that relies on working with the proper partners in the industry, right? And that kind of brings us to JD over here at Arca. Would love to learn more, JD.
Well, it's great to be with you both today, Jonah and Peter. Thanks a ton for having me on the show. It's also super fun to geek out on all things securities, and I assume that's what we're going to be doing for the next segment, which is great. So perhaps I should start with a little bit of introduction myself and a little bit of introduction regarding Arca and what we're doing over at Arca and Arca Labs. I personally have been with the company for about 3 years now, which allows me to have really seen a huge transformation both in the digital asset securities market as well as the digital securities space. But most importantly, and one of the things that I think we're all really looking forward to is the ever-coming change with reference to capital markets and their adoption of digital asset securities. For those of you that don't know me, I have a traditional capital markets background, spent the far majority of my career trying to solve infrastructure-related issues, some of the things that have challenged traditional space and tried to incorporate technology in order to drive markets forward. Some of the things that I've worked on in the past are the creation of derivative markets for emerging products, while the likes of companies like CME and NYMEX also created several different exchanges for commodities like oil and carbon, helped to create the first OTC clearing facility to mitigate risk during the Enron crisis. Wow. And also created tools that kind of help facilitate the onset of electronic trading. So I've had a lot of fun being in evolving markets, and I got involved in digital assets in 2015. And for perspective and timing, that's right around when the CME was starting to form their Bitcoin reference rate, which ultimately is the index that was used to settle those contracts. So I've been around for a little bit of time, and I've had a little bit of foresight of seeing the way the markets have moved thus far. So if it's okay with you guys, maybe a little bit about Arca, I guess.
Please.
Arca itself is an asset management firm that innovates and has been investing in digital assets for about 4 years now. The mission of the firm itself is to offer high quality asset management products that meet compliance and legal and regulatory and operational standards for sophisticated traders. And our products include things like actively managed hedge funds, passive vehicles, and something that I hope to talk about today, which are our first to market BTFs or blockchain transferred funds. So personally, I run a division of Arca that's called Arca Labs. And if I had to say what Arca Labs was doing, I would say that our mandate is really to focus on reimagining the potential of investment vehicles. So for investors and companies who believe in technological disruption and believe that it would create a better and faster and more connected global ecosystem, we spend a lot of time there. So we've got 4 different focuses. One's our in-house R&D lab. The second really is in co-innovating partnerships, so fostering relationships with folks in the marketplace, other companies that are looking to bring tokenized products to market, community building, and then advisory. So probably a little longer than I would have liked, but that's really what we do at Arca and Arca Labs. And I just can't wait to get this conversation started, guys.
Beautiful.
Awesome. No, that was a great rundown. I mean, I think it's safe to say that you and Arca are doing a lot of different things. So I guess, yeah, let's get into the flagship product. I mean, Arca has been, a core component in our industry. You are trailblazers, pioneers, to say the least, to get SEC approval for the first 40 Act blockchain-based fund, our blockchain transfer fund, the BTF. Obviously that did not come easy. over 24 months of iterations and discussions with the SEC. But hats off to you guys for doing that. I think a lot of people don't realize is that you can take blockchain products and follow the same SEC's rules and regulatory rule set for existing securities laws. And I think that's amazing what you guys are doing. I'd love to learn more about the product for our audiences and ourselves, and what Arcoin stands for and what you can kind of do with that.
Totally. So yeah, Jonah, appreciate the kind words there. And in my opinion, I think the creation of the BTF, and the BTF is the acronym for what we call Blockchain Transfer Fund, is probably one of the least spoken achievements within the digital asset security space. And I think there have been a lot of awesome innovations so far, but this specifically, which began as a conversation with the SEC in 2018 and ultimately culminated into an SEC registered product in July of 2020, takes exactly what you said, which are elements of existing registered regulation, right? So there's obviously the kind of consumer, the Investment Company Act of 1940, which governs a lot of different structured products, including mutual funds and ETFs and others. And there are some stringent rules regarding the operation of those funds. And we had a thesis at the time, which is really, again, 2018, which was that if we could create a product under the 40 Act, we would instill an element of confidence for institutional investors who may need some sort of comfort in order to engage in the trading of, the holding of, and the transferring of digital asset securities. So our thesis was that if we took a page from the way that the ETF market, kind of really grew out of what the mutual fund market was by using blockchain, we could be in a very advantaged position. So what we did was we approached the regulator and said, this is what we're trying to do. We'd like to create the next evolution of the 40 Act product. We'd like to create a US Treasury fund, very, very plain vanilla. And we'd like to go ahead and inject blockchain, so to speak, into the heart of the product. And let's talk about how we want to do that, right? That would be for transferability of shares in the form of digital asset securities. But more importantly, the efficiencies of that peer-to-peer transferability in between individual shareholders of the fund. And this had really never been done before. So the regulator was very interested. They were intrigued. They wanted to know more. And we set off to actually create our first prospectus, which we then filed with the SEC some months later. And I think that there are three real big important considerations here when we talk about the BTF. The first is that it was a product, right? It's a fund. It's a registered fund called the Arca US Treasury Fund. And that product itself, is a closed-end interval fund, which allows for continuous subscriptions and periodic redemptions of digital asset securities. And those digital asset securities are called Arcoin. So the portfolio of this fund, similarly, is a portfolio of US Treasuries, so which is done very purposely, by the way, right? Because Treasuries are liquid, they're very well known, they're backed by the full faith and credit of the US government, and that fund, as you're mentioning, Jonah, I can see from your hand, also has a unique benefit, which is that in low interest rate times also maintains a relatively stable NAV, net asset value. And that net asset value has remained at $1 for almost the entire existence of the fund. So it's really a low volatility token that has been registered with the SEC under the 40 Act, which is super special. And keep in mind that there's different elements here, right? And one element is that we've created a treasury fund, very plain vanilla. But the wrapper itself, that's already been approved by the regulator, has multiple different applications, and we could take other different securities and put them in that wrapper in the same way, whereby they'll be tokenized. We can deliver shares in the form of digital asset securities that then are transferable as well. So that was, kind of very, very purposely done. And that fund was created, the Arca US Treasury Fund was created simply not just for investment, because you can invest in treasury funds that are ETFs or mutual funds or others, but because we believe that there's a utility purpose for the token that's generated. And the token that's generated, we call Arcoin. And as I said before, that token then travels on the Ethereum blockchain and can be transferred from one wallet to another wallet via peer-to-peer transfer. So it's very, very different than buying, kind of an ETF, having your shares held, by your broker dealer and street name, than actually having them and holding your own sovereign wallet and being able to touch and do whatever you'd like to do with that asset.
Awesome. That was great to hear. I mean, we love the breakdown, and I actually read through the BTF white paper. I know Jonah did as well. It really opened my eyes personally to, some other use cases aside from an investment standpoint, which I didn't even think about. And it's all about the infrastructure on the back end, which obviously Arca Labs is working heavily on developing. And that's key, right? You can't drive anywhere if there's no roads. So definitely a piece to hit on.
Exactly.
I think kind of on that note, I would love to hear if there's anything, the kind of use cases aside from the fund, the investment level. What are you guys looking at, with other institutions or with other players, anyone you're kind of in discussions with about this Arcoin product specifically? Are there any specific use cases popping out to institutions or to yourselves that you're kind of, pushing on the market?
Yeah, I think that's right. I think that we're finally at a point now where we've begun to speak with third parties regarding what utilization could be in two different fronts. And I say we're finally at that stage. It's because when we received our effectiveness from the SEC, there were still some things that we needed to work on with reference to our prospectus. So the first thing that we did once we received that was to work with a partner in Signature Bank to allow for subscriptions to the fund through their Signet infrastructure.
Awesome.
So previously, the SEC had allowed for us to offer subscriptions with US dollars via US dollars via wire and ACH. They allowed for us to add Arcoin to add Signet to that list as well. So commercial clients of Signature Bank have the ability to subscribe to our fund using their Signet account. The second thing that we received relief on was on a redemption window. So as a closed-end interval fund, we offer continuous subscriptions and periodic redemptions. Initially, our periodic redemptions were a window of about 3 months, the window of 3 months. The SEC allowed for us to have a relief earlier last year to contract that period to a monthly redemption. So we conduct a redemption window through the service providers that we're required to have under the 40 Act on a monthly basis. And then the final thing I would say, which is super interesting for the digital asset security space, is that we've partnered with Oasis Pro Markets. And we've done so to work with the SEC to receive relief to allow for Arcoin and other BTF tokens, not just to be traded peer-to-peer, but also be traded on digital asset security markets as well.
Very cool.
So that's the final step for us with reference to the BTF structure. And our hope is that, in working with the SEC, that we'll be permitted to do so in due course. And then that paves the way for a whole new host of applications. It allows for us to expand that family from just the U.S. Treasury Fund to a series of other funds. It allows for us to, work with, other organizations, Oasis Pro specifically in this case, in order to have them listed on different ATSs. And then we've got, the ability for us to start working on the usability of Arcoin. So how is it that Arcoin can be used as a registered product, right?
Mm-hmm.
As something that does maintain low volatility and has been, consistently have had its NAV struck at $1. Where could that work? And there are a couple of places I think that, give you examples to try to, captivate imagination. One of those would be with, let's say, for example, in a banking infrastructure, right? We've got, issues with, let's say, collateral management. And there's a POC that took place last year. And that POC basically took a FX trade and simulated it on a blockchain-based approach. So essentially took all the ISDAs and did them on chain. All the collateral movements, all the settlements, all of the pricing for this transaction was done on chain. But the problem that was encountered was that there was no ability for the actual collateral to move. The counterparts couldn't agree on a blockchain. They couldn't agree on what that actual asset would be. And instead of actually doing the settlement on chain, they conducted that off chain via ACH. And that ultimately, introduced an element of risk, which was found because of the amount of time it took to settle. And we're, working with, a third party as well as several financial institutions to resurrect that POC and to resurrect it using Arcoin as its collateral movement for settlement purposes. And there's some very, very, very significant benefits in doing that. The first of which is that your counterparty credit risk is reduced significantly, because what you're doing now is you're actually settling with that counterpart and mitigating the risk that you have in case of a failure of default. And now you're, doing so as frequently as 10 minutes or a little bit more. And the math's been calculated, and that reduces the counterparty credit risk down, by 80-something%, I think 84%.
Wow.
So
is that also kind of a function of this could happen in real time versus waiting for the next business day or waiting for the weekend to finish up? Is that
that's right? That's right, Peter. It essentially takes the 4 p.m. close. That ultimately is kind of a kind of a ticking buzzer as to when you need to get something done by, and eliminates that and allows you to do things not just throughout the current day, but also over the weekend if indeed you need to or you'd like to. So that's a super cool use case for us. There's also treasury management use cases that could be used for Arcoin as well. Kind of as I mentioned in kind of my prelude, partnering with the appropriate folks in traditional finance is the path that we're taking in order to introduce these products to the market.
Definitely. Do you see a future where if I have multiple blockchain transferred funds, I could just swap them for each other if there would be a reason to do so, rather than selling off into fiat and then taking that and having to repurchase? Is that kind of a future? Would there be benefits to that you see, especially on the institutional level?
Yeah, I mean, when I think about that, I'm thinking about like net settlement, for example, right? Whereby you can net out collateral movements and use just one instrument to settle. Another instance would be in a swap, a simple agreement whereby you're just transacting one entity, one BTF for another. So a treasury fund for an equity fund, for example. And let's say, for example, your Arcoin's maintaining a stable value. You simply could send $1,203 million worth of Arcoin, which would be the requisite number of Arcoin, in exchange for, let's say, another security as well. So there's plenty of use cases, we believe, for kind of Arcoin, and certainly even more so for the BTF wrapper once we start pushing out additional products.
Very nice. I have a final question on that front. It sounds like obviously the Arcoin BTF paved the way for future products to come. Is there anything very pertinent that you would like to see come to the market to either complement Arcoin, or maybe what kind of product is in the most demand right now, or what kind of product can most take advantage of the BTF structure now that it's kind of plug and play, or more so than it was 2-3 years ago?
That's right. I mean, so the beauty of the wrapper that we've created in the BTF is that we could take any sort of security and put it. So we've been having conversations with third parties that range from a basket of equities, whereby you could fine tune a portfolio for a specific purpose, all the way across to things like real estate and other different assets. And for us, the benefit here is not just the delivery and the fact that you've got a digital asset security that's transferable per se, but it's also that we created those instruments under the 40 Act that provides some additional comfort to folks who understand the 40 Act and understand other instruments that they utilize in their own internal workflows already that are under the 40 Act.
Very, very interesting. And I know one of the key pinnacles of this industry and tokenization is the secondary trading capabilities. I know Jonah is super into the ATS side of things. I want to let him hop in and kind of get your thoughts on that.
Yeah, for sure. So you just mentioned that, so the Arcoin is currently only traded in a peer-to-peer fashion. Is that correct? Like if I wanted to trade, I know if I want to invest in it, I go to Securitize, but if I want to, actually trade it, how does that work? And it's like, if you're going to Oasis Pro Markets or other ATSs, how does that change the liquidity? Does that improve it? Does that hurt it? Is there arbitrage opportunities, et cetera?
Yeah. So currently, Jonah, you're correct. We have a partner in Securitize that handles the issuance of our digital asset security Arcoin. So as part of those flows, you would go to the Securitize platform and you would create a secure ID. And then part of the secure ID process is providing a digital asset security wallet that'd be the recipient of those tokens. So if you elect to receive those tokens directly into your wallet, you've already now undergone the process whereby you provided AML and KYC, and you're also whitelisted. So Arcoin in that scenario is then transferable to any other wallet address that's been whitelisted through that process. So let's say, for example, in the easiest example, let's say we go out for a pizza later in the day. We're all, kind of whitelisted, and I decided I'm being, generous. I can send you guys, kind of Arcoin to pay for, that pizza if I wanted to reimburse you at the end of the day. So provided your wallets are whitelisted, there's simple transferability on the Ethereum blockchain that you'd expect.
Right.
With reference to trading on ATS is moving forward, we're super excited because what our observations have been are that, kind of, as you mentioned before, there's a number of ATSs that are out there. But I think that one of the things that the ATSs are clamoring for right now are liquid products. And if you take a look at, STO.com and look at your website, right? And you take a look at what the market capitalization is of digital asset securities, you'll see there's been a precipitous rise, obviously, in the market, total market value of the digital asset security market. However, we haven't seen that corresponding increase just yet in trading on ATSs. Our belief is that it's coming, and it's coming soon. The conversations we're having with the leading ATSs in the markets are that they've got a broad pipeline of products, some of which we may be involved in as well, that'll hopefully help stir more interest in trading on these different ATSs. And keep in mind as well, we're so firmly entrenched in the digital asset security market that we believe that all securities become digital asset securities down the road. So if that's the case, and that's what we believe in, that only means that folks that are actually looking to trade traditional securities will make that move from kind of the names that we know to some of the others that kind of are upstart, whether it's T0,
Right.
whether it's Securitize, whether it's Oasis Pro Markets, whether it's Simbridge or INX or others.
Mhm.
Right. I love that, because going back a little bit, so there's a company called Realty that's doing something similar. I'm sure there's a lot of others, just in the sense of, I don't know if you're familiar with Realty, but Realty is one of the largest security token issuers, a real estate issuance platform, where they have 200 plus single family homes, right? And they sell fractional interest in each home to an international investor base. And those investors are whitelisted as well. So it's very similar how you can enable peer-to-peer transfer, you whitelist investors so you create a closed system within an open system. So as long as that's what I think that a lot of people are also overlooking is we follow all the compliance, we follow all the SEC regulations. It's just baked into the token or the protocol of that actual asset you're holding. So let's say I have an Arcoin because I'm over 18 and I'm in US, I could hold Arcoin. I could trade it to you, JD, or I could trade it to Peter. But if I want to go to someone in maybe like Australia, I mean, that's probably allowed, or like maybe Iran or North Korea, to say a crazy example, the protocol would be like, no. So it's baked into the token. And I think that's very amazing.
There's another point there as well. So the smart contract governs obviously where this token can go. And currently we're only open to US subscribers or transferring to US subscribers. But the secondary point, Jonah, that you bring up there that isn't spoken about a lot is the fact that by owning this token, inherently you're AML KYC clean, right? So if you're trading with somebody else in that universe, you automatically know that at least you're dealing with someone who's underwent AML KYC. You're not dealing with a bad actor. And ultimately, that's someone who should conform with your own company's internal compliance protocols.
100%.
And that's kind of the area where we not lose, but we lose real deep DeFi people. Nobody wants to KYC AML, but to be real, let's go. I mean, on an institutional level, that's a necessity, right? That is going to happen no matter what. And we're seeing more interest from the SEC and governing bodies, like kind of working their way to it to get on-chain IDs in some capacity or different asset level tiers regarding, what kind of levels of compliance you need and all that. So, I mean, we're in the right spot. We know it's coming. So the best preparation is what we're doing right now. Kind of on the ATS level as well. Obviously, more products that come to market, more organic investors that come and say, hey, I want to start buying into the digital asset security realm, into private products or any of these BTFs that are coming to market. Given your background with exchanges, JD, what do you think about helping build liquidity in the industry? Is it a chicken or an egg problem? Is it, hey, we have to help build this infrastructure up to bring these investors, or will things become organic? Would love to hear your thoughts on that, because I think it's just kind of a big endeavor to expect the general public to come and bring liquidity on their own. So,
yeah. So, I mean, I think there are a couple of points here, Peter. The first thing I would say is the comment you made earlier regarding, we're building the road. Well, I would take that one step further. I would say we're building the road, we're building the car, and we're also creating the rules for how to drive all at once in a very, very, very fast period of time, right? So I think that it's unrealistic to think that in such a short period of time that, kind of the education would have spread in such a broad way. So I think that the ATSs themselves, in my opinion, having built 2 different exchanges previously, I think the ATSs are on the right path. I mean, right now they're abiding by and working with the regulator to ensure that they're adhering to and that they have a say in what the rules are moving forward. And let's also recognize that there are some unanswered questions with reference to digital asset securities regarding custody and other things that make it a little bit more complicated or unknown for certain people to get involved in. But our belief is very simple. It's that when the institutions are going to come, they're going to be going to highly regulated entities, and those highly regulated entities are going to be operating with a track record of multiple years of operations, which will give additional comfort to the institutional investors that need to come. The second thing I would say is that as we start, coming up with different structures, Arca and others that are out there, our belief is that we're going to be able to create products that are not going to be available in other places, right? So you ask, why is it there's, kind of not a ton of liquidity on all of these different ATSs that are out there? Well, I think that when folks are making a decision right now as to whether or not to invest or to trade on a digital asset security ATS or trade in an environment that they're currently familiar with and understand, it's probably a big ask. Once we start coming up with different products that don't exist in the traditional space, there's going to be, kind of no question that the type of investors, the institutional types, are going to be coming. And part of our mandate at Arca Labs is to come up with what those products are. And we've got, kind of a product we'll be pushing forward with, in the course of the next 90 days. And we believe that that's the beginning of products that don't exist in the traditional space, that will exist in, kind of the digital asset security world, that our hope will be part of, kind of that inertia that starts bringing in additional investment from the traditional space.
I like it. Very well said. I like that. Need to create unique products that you can't find elsewhere that will drive the demand to come to this region, to come to this specific area, which will inherently act as like a positive cycle loop and bring more people in. Agreed.
Yeah. And building off that, I mean, obviously there's a huge benefit of tokenization for, private securities, or even public or private in this case, is it brings liquidity to private assets, right? But as we're seeing today on a lot of these ATSs, what we track in stmmarket.com is that just because liquidity is possible does not mean there's going to be any. There's a huge side of that of like, you need to have a ton of demand from the investors. If it's not going to be, at least from the retail point of view, if this is not an exciting product, like just because I can get my money out early, like, yeah, that's great, but it does not mean there's going to be live trading like crazy all 24/7.
Right. And just to take that point one step further, that's the reason why we're so aggressively trying to build out the use cases for Arcoin, right? Because we don't expect that people are suddenly going to, kind of come to the Arca US Treasury Fund and invest in it simply for the purpose of investing. Sure, some people will experiment. They'll try to understand how to manage, kind of an asset on their own within their own wallet infrastructure, maybe trade it peer-to-peer a couple of times to get used to that, et cetera. But in terms of broader adoption, our belief is that we've got to build out the use cases for folks. They understand what the power is of this digital asset that we've created. And then once we've done that, that'll help to fuel the secondary markets pending the SEC provides us with that review.
Agreed. I think it was great to hear about the banking side for collateral management and then corporations treasury management, like that right there. You don't need retail investors to come in or anything. You have the institutions right there, their own use cases, aside from an investment standpoint. I think it's great. I mean, the more features you can offer, the wider of a net you can cast and kind of capitalize on that. So
and the more confidence, and Peter, and the more confidence that we can give to the marketplace.
Exactly.
I think right now that's what people are looking for.
That's also the thing. Like everyone, people love to point at the SEC and say, hey, we're waiting on regulation from them, or we're waiting on guidance or input from them. But at the same time, look at the corporations that they are comfortable dealing with and the organizations that they are comfortable working with. As the corporation has stepped in and come in and become involved more so, I mean, that gives the SEC confidence to say, hey, maybe blockchain is okay. Maybe we can handle this. Maybe we can work with this. And that's, right, I think, even more important piece of the process right now.
Yeah, and there's one point that I would add to that as well, Peter. I think that, people, talk about the SEC without having full understanding and knowledge of, working with them. And we've had the foresight of being able to, kind of work with them for multiple different years in terms of, our prospectus because of the U.S. Treasury Fund. And our observations at the SEC are that, they're incredibly knowledgeable. When we showed up originally, they were well aware of, what we were talking about. And we found that, the conversations we have are incredibly engaging. We go very deep with the regulator. And we found that they've provided, really unbelievable guidance for us in terms of trying to create product that conforms with existing frameworks and regulation.
Nice. Kind of on that, without having to go super deep or, give us all the alpha, was there anything that stood out in those conversations, or any kind of guidance they offered or any comments they made that you want to share with kind of the industry?
Yeah, I think it's I think it's at the SEC on the whole, generally speaking, are intrigued by, kind of the technology. I think they understand that innovation is something that, is necessary. And I think that they're, kind of open and willing to work with other parties from the outside that want to help to build on, kind of regulation as it sits currently. And our experiences have been, wholly positive. And we look forward to, continuing to offer additional funds and additional products for the consideration of the regulator, such that we can go effective with additional products.
Nice. I'm excited for that. I mean, you guys have paved the way. Only more to come, right?
I think the reality is, as we've seen in any innovation throughout human history, is that innovation in tech moves way faster than regulation. I think it's an inevitable future, but what we need to come together and have some convergence is the SEC needs oversight. They can't just be like, oh, decentralized system, have fun. Like, they need oversight. They need to know who the investors are, protect the investors. But we also add the blockchain component on that. So whether it's we do the open or the closed system within the open system where we whitelist investors and have them trade on a blockchain exchange or marketplace, or we do some sort of like permission blockchain, which I think is honestly, in my opinion, would be the first thing to get approved, is my opinion, is where permission blockchain, yeah, you have all the benefits of blockchain, but then you also have the control / oversight of regulators and the SEC is kind of how I'm looking at the near term, midterm future.
Yeah, I think that you're hitting the nail on the head, right? So what are the two biggest issues that are out there? It's, AML, KYC, and custody, right? That's what we're talking about here at the core of it all. And I think, and I think that, kind of, again, you're speaking, not speaking out of turn and not speaking for the SEC, but my observations have been that the SEC does not want to stifle innovation, right? And I think one great way to stifle innovation is to come out with, some sort of a broad framework that, basically dictates the way that markets are going to evolve before we've even gotten there yet. We're still very early right now with the technology. We're very, very early right now with how it impacts capital markets. I don't think there's any sort of doubt that this industry is ripe for tremendous change, and it's happening and coming. But I think that when you're dealing with the largest single economy in the world, I do appreciate the fact that we do need to take our time.
Yeah. Even on that note, it's easy to want to go from 0 to 100 and say, oh, let's take these liquid assets and just make them tradable right now. But what I'm recognizing in a lot more of my conversations, even with potential clients and people in the industry, is what if we just go from 0 to 1, 0 to 5, like take private equity interest, put them on the blockchain. Okay, now make an internal bulletin. Your existing LPs can trade with each other, peer-to-peer swaps, kind of what Arcoin's original vision was, right? Eventually we could work our way to the Oasis Pro markets, to the T0s, but we don't have to go right now. Let's get everyone comfortable, get the big money involved, get them comfortable, like you said, holding a digital asset, working with the technology, and then we can move forward. So it goes hand in hand, right?
That's right. If there's one thing I think that working at, Arca Labs has taught me, it's patience. And I'm by nature an impatient.
Me too.
So that's precisely correct.
I also love.
Go, Peter.
I was gonna say, I also love, like, we're all very deep in the crypto space, and in the office, it's easy to bounce very high or deep ideas off each other, but talk to any of your friends or outside the circle, get a sense of what they're comfortable with. And that will tell you, okay, we got to ramp it in a teeny bit, get them educated and comfortable, and then we can move forward. So
that's right.
Totally. Well, I feel like we could talk for years. I mean, this has been a lot of fun, but it's probably a good place to stop here, unless Jerald or JD, my apologies, or Peter, if you want to say anything, concluding thoughts.
That's pretty much it. I mean, I really enjoyed the reading about the blockchain transfer fund white paper and seeing Arcoin come to fruition, learn about collateral management, treasury management, opened my perspective up a lot more as to what the back end needs and kind of the uses there. Excited for more funds to come to the market through you guys at Arca and Arca Labs, JD. And that's pretty much it.
Totally. Well, thanks so much for coming on, JD. It was a pleasure to have you. Next month, we'll be joined by another Arca representative discussing what the digital security token industry can do to remove barriers to entry for traditional institutions entering the space. So be sure to follow along and like and subscribe, and we'll see you next month.
Thanks a ton for having me on the show, guys. If anyone's interested in reading the BTF paper that you mentioned before, Peter, you can find that at www.arcalabs.com. We'd love to hear anyone who's got thoughts or comments, and love to engage with the industry even further. So thanks again for having me, guys.
Highly recommend it. And our pleasure, JD.
Absolutely.
Talk next time.
Thanks, JD.